Hi everyone, welcome to KRISHNA'S Trading YouTube channel. In the last video, I discussed about what is CPR, how it is calculated, what is the importance of CPR, and support and resistances we discussed. Coming to this video, what is price action trading? Price action is a method where a trader takes a decision based on actual price movement by candle to candle on the chart, not based on any indicators like RSI, Bollinger Band, MACD, or etc. Candlestick charts are most popular because they help better visualize price movements by displaying open, high, low, close values. Just like any method in the trading, price action is also not 100% accurate, but it gives high probability trades compared to indicators which are lagging. I think I already said about this one. CPR is not a lagging indicator, it's a stable indicator. So wherever we go and plot the CPR indicator, it will be the same in all the time frames. Important candlestick patterns. There are so many candlestick types are there in the market. You don't need to remember all of them. Based on my experience, I focus mainly on few candles only because they are simple and practical. The first one is Doji candle or indecision candle. Price opened at a certain point. Price opened at a certain point and the sellers pushed the market to lower, and from the low value the buyers came into the picture and takes the market into the higher aggressively, and one high point created. From there again the sellers came into the picture and tried to push the market down and close the market near opening value. That means both the sellers and the buyers are strong. The doji candle will also look like a small body in sometimes. It's irrespective of color. That means if the body of a doji candle, whether it is red or green, both we will consider it as a doji candle only. Don't confuse. The next type is Marubozu candlesticks. In the Marubozu candlestick, there are two. One is bullish, one is bearish. In the Marubozu bullish candle, the price opens at certain point. That is the only the low point. No sellers came into the picture, and buyers aggressively take it to a higher point and sustained at a higher point and closed the candle without any wick. That is a bullish Marubozu candle. That means there are no sellers at all. Full and full buyers take the control of the market and try to push the market to upside. And coming to this one, the price opened at a certain point and sellers aggressively take the market into a bearish mode, into a lower point and sustained there. No buyers came into the picture, closed the candle. So that is called Marubozu bearish candle. In this candle, buyers are aggressive. In this candle, sellers are aggressive, buyers in control, sellers in control. Same way, like this only, this candle also we call it as a bullish candle. In this candle, compared to this one, we have one small wick at low and high. What it means? The price opened here, sellers try to take it to a lower side, not sustained, and buyers come into the picture, aggressively take it to a one higher point, and then from higher point, the sellers try to push the market lower point, not able to sustain there, and close the candle near the high. This is a bullish candle. Small price rejection. This is also a bullish candle only with small price rejection. Here there is no sellers came into the picture, but here sellers try to push the market. That's it. That is the only difference between them. Same way in red candle, the price opened here and buyers try to take market into a higher position, and from the higher the sellers came into the picture and tried to push the market to a lower point. From the lower point, some buyers came into the picture and tried to push the market upside and close here. This is entirely selling pressure. No buyers are there in this candle. Compared to this one, here no buyers are there. Here some small buyers came into the picture. That is a simple difference. And coming to next candlestick type, this is a pin bar candlestick. In this candle, the price open at a certain point and sellers try to take control and move it to a lower point. From the lower point, buyers come into the picture and aggressively take the market price to a one certain point that is higher as well as the close also. Here guys, remember sometimes just like this bullish candle, sometimes it will be having the small wick also. No need to worry, that is also a pin bar candle only. In this candle, the buyers are aggressively take the control. This candle considered as a reversal candle also because the sellers try to push the market, but immediately buyers take the control. In this candle, same way, opened here and buyers try to push the market to a certain point. From the higher point, immediately the sellers push the market to a lower point. At the lower point, they close the candle and buyers try to push but not sustain. Sellers aggressively take a control. This is a pin bar bearish candle. Here, one more thing we should remember, irrespective of color, remember the logic only. Who are in control, we should remember, irrespective of the color. For the sake of identification, I mentioned it as a green and red. Sometimes it will be like I will say one thing. It will go up and little wick and come down and close here means what will happen? Wait, it will look like this also. So whether it is green or red, both are pin bar candle only. No need to consider the color. It is a pin bar candle only. Same way here also. If it if it make a one body with a green, for example, green closing, this is also we should consider it as a pin bar bearish candle only because the aggressive sellers are came into the picture. Same way here buyers. That is the differences between the pin bar candle. Color does not matter. And one more thing we should remember, these candlesticks are alone is not important. Important is the location. I will give one small example to understand this. Suppose we have a property at Bangalore city and another property outside of the city. Which property will have more priority generally? Bangalore city property or outside city property? Generally, within the heart of the city is the most important priority people will give. Same thing in trading also. Even though you see a bullish candle or bearish candle in the chart, you should look where is the candle is forming. That is the important. That means the location is important at that place, candle important. Never ever do random trades by looking a green candle or red candle. Bullish is not always for long entries. Bearish is not always for the short entries. Location is the important where it is forming. Where it is forming in the sense we are discussing about the CPR indicator, right? So at which level it is forming. Based on that, we will take the entries. And one more thing, guys, while discussing candlesticks only, I want to mention one thing. If it is a 5 minute candle opening, for example, if it is a 5 minute candle opening here and try to go up, and people will think like they want to buy in the middle of the candle. Never ever do such kind of things. Whenever a candle is forming, wait for a candle to complete its timing. Like 5 minute candle means 5 minutes after completion, where is the closing happening? That is the important because in the market, many times fake candles will come. I will explain with a small example. In this example, if a candle opened here, for example, 5 minute candle, market take it to a higher level, 4 minutes completed or 3 minutes completed. If anybody try to enter into the market by seeing that bullish candle, it is not at closed. I mean that 5 minute candle not at close. If they enter, unfortunately, if it is a fake candle means it will come back to downside immediately. So better wait for the candle closing. Once it is closing fully, then we can take the entry. Based on that, we will take the risk reward ratio. So patience is the important. And one more thing, trading is always a probability, not a certainty. Certainty in the sense 2 plus 2 is equals to 4. That is always. But probability is not always. It is a might be, may not be. So learn one by one, observe in the live market. Never ever try to take any kind of entries, especially for the beginners. Beginners try to learn and observe the live markets. Don't ever enter into the market without having any kind of knowledge. That's all for the video. Thank you for watching the video. Please like, share, and subscribe to my channel, Krishna's Trading. Thank you.